All right, y'all. This talk about a central bank pivot, I gotta end this right now. My name's Evan. This is the McChronicle for Thursday, April 4th, 2022, where the future starts today. Stock market's been up a bit recently. Everyone seems to think just because stocks and real estate are down, the Federal Reserve is going to pivot for them and central banks are going to start cutting rates. For the upteenth time, I said it before, I'm going to say it again. Asset prices aren't the name of the game anymore because inflation is now a geopolitical issue and inflation is now their main goal once again. Okay? All there is to it. Mike Martins called this. 2022 was going to be the year of the protest. And what are they protesting about? Cost of living. So again, we're fighting inflation, and everybody thinks they're suddenly going to pivot when inflation's high, but asset prices have come down because inflation hits those who are protesting, and those where inflation hurts the most don't own assets. Yeah, you can see the picture here, right? And to those of you saying inflation is going to come down enough for the central banks to cut rates, have a look at this. First chart is rent price growth year over year in the top cities in Canada. Double digits. How many numbers on that screen show double digits? And in the US, have a look at this. Rents for 1 and 2 bedroom apartments. Nationally, they're up 9 to 11% year over year. And this is 1/3 of the consumer price index. Okay, let's say growth moderates here in the medium term. Let's say by the first quarter of this year, rent price growth falls to about 5% year over year. But we also have food prices. We still have fertilizer shortages all over the place, which means foods, unfortunately, pains me to say it, is still going to be up double digits well into next year. Which means inflation, as we head deeper into a recession, is still going to be at 4 to 5% year over year. And you're going to tell me a central bank can cut rates when inflation is still 5% year over year, but the overnight rate the central bank set isn't even going to be that high. I mean, seriously, good luck with that. And the Bank of England, I'll put this up for you last. The Bank of England today said we're going to be in a recession until the middle of 2024 and still hiked rates anyways. And what the Bank of England does, let's face it, pretty much leads what everyone else does. Couldn't believe I had to do this video, but here it is. Smash a like, leave a comment, subscribe, follow me on Twitter and Instagram, both at the McChronicle. Have a good night, everybody. And lastly, not sure this matters, but it looks like the Eurodollar market is starting to figure this out too. It's now pricing in less than a 50% chance of a Q1 rate cut. My opinion, don't expect one until at the very least Q3. That's where I'm going to go ahead and leave it. Smash the like, leave a comment, subscribe, follow me on Twitter at the McChronicle and on Instagram at the McChronicle. Have a good day, everybody.